Alibaba stock, is it time to buy more or is it time to sell? Now, just before we get stuck into the video, just look at this chart. It is a very ugly looking chart. Oh, look at this, down a huge amount over the last year. And if we pop onto the 5-year chart, you can see here, about October time, it actually peaked out at its 52-week highs, which was $319. And since about October time 2020, it has fallen off a cliff with negative news after negative news. And pretty much like any Chinese stock out there, it's just been an awful year for Chinese stocks. They have got battered, and pretty much every single Chinese stock right now is down at 52-week lows. And I'm not going to lie, I didn't even realize Alibaba was $157. It wasn't until last night, Sunday night, when I was kind of doing the research for this video today, that I went onto the Alibaba stock chart and I went, that can't be right. Alibaba wasn't $157 on Friday, was it? I didn't really even realize how bad of a week it had last week. I knew it was kind of got to the 180 range, but to go down to $157, I was like, what? When did this happen? And yeah, I mean, I don't really keep up to stocks too much because as a long-term investor, I'm kind of more interested where they're going to go over a long period of time. So really day-to-day movements, I don't really keep on top of really. I kind of just do a bit of a refresh at the end of the week where everything's at. And yeah, I didn't even realize how bad of a week it had last week, and I can't believe it. You know, Alibaba down at $157, and it just kind of goes to the point of view where, you know, back in October time when we were kind of pushing new 52-week highs at $319, it's just a point of view that anything can happen in the stock market. Anything can change so quickly. This little run up that we would have had like the previous few years, and then out of nowhere, boom, you know, a stock loses half its value, and it's just they're just kind of the reality check that anything can kind of happen in the stock market. Now, since October time, it is pretty much been negative news that has kind of pushed the share price down. In the past, Chinese stocks have always been pushed negatively in the media by the US. There's a lot of people in the US that don't like Chinese stocks, and they will always talk negative about it. Sometimes it just gets louder than other times, and that's the thing you've always got to be careful of. And that's when, if you get involved in Chinese stocks, you've always got to be careful. They are one of those stocks that always get quite a bit of negative press, especially by the US. Now, one of the big things that always gets pushed out with Chinese stocks, and this has happened for many years, is that their numbers aren't legit. Now, if you think the numbers aren't legit, then obviously you will not want to get involved in this company and get involved in Alibaba stock, because if you think the numbers are legit, then at any point this is just going to go down to zero and they're going to get delisted. So that's something that you want to take into consideration. For me personally, I've always thought, you know what, there's a chance that some of these Chinese companies don't have legit numbers, but there's also so much of a risk with many US companies out of nowhere that they can come out and next thing you know, it turns out, you know, they might have been lying about some numbers. So I think like you could say there is risks with Chinese stocks and having trust in some numbers, but I think that it is as much chance as one of my US listings kind of going wrong with that sort of reason as well. So for me personally, I've never been worried a lot by the financials of a lot of these Chinese stocks. And one big sign of confidence for me was when I saw Charlie Munger, who is one of the best investors around. And by the way, I didn't even realize Charlie Munger was now 97. That blew my mind. I didn't even realize he was 97. I thought he was kind of towards the back end of his 80s. Like, it's just absolutely nuts. But Charlie Munger, one of the best investors that's ever been on the planet, he actually started buying some shares in Alibaba. So I think that's a big sign of confidence, because Charlie Munger has previously been very against other things like Robinhood, cryptocurrencies. So for him to buy start buying shares in Alibaba was actually a really big surprise to me, because I thought there was no way, if you don't believe in like Robinhood and cryptocurrencies, I just can't see him buying shares in Chinese stocks and ADRs, but here we go. So that was a big sign of confidence for me, especially with the number side of it. There was also a lot of negative press around this time, which was a lot to do with Jack Ma, who is the founder of Alibaba, and basically he went into a game of hide and seek and nobody could find him for a while, and he didn't show up in public, and then one day he was back in public. So that kind of big pressure that people thought he was kidnapped and being kept in a basement for a good few weeks, that soon went out the window. But that was one thing that kind of pushed the share price down as well. Then as well, some more delisting fears came out about Alibaba, and then that took the price a little bit lower. And then even more recently, China are looking at cracking down on a lot of these Chinese stocks and putting more regulations on them. And that's kind of spooking investors a little bit more and thinking that that will affect the company. So I thought I'd just mention them risks because there are some little risks with the company, and if I don't mention some of them risks, even though I mentioned them before, there'll be someone in the comments that goes, but what about this? So hopefully that's kind of covered everything there. Personally for me, like I said, for me, that I think the numbers are legit, and the risks that do associate with Alibaba I think are just really hyped up in the US media, making it sound like a bigger deal than what it is. It'll be more for me just cracking down how they kind of keep a monopoly over certain things, which Alibaba do tend to do. I will admit, Alibaba do play the monopoly card a little bit to keep their growth going. And sure, they might get a bit more tight regulations on a few things, but do I think it will affect Alibaba in the long term? No. Do I think the profit will fall off a cliff? No. Do I think revenue will fall off a cliff? No. I still think profit and revenue will do amazing. I think maybe if, depending on how tight the regulations are, it might affect their growth a little bit more and it might slow down a little bit more. I will take that. I will say that's a fair point. But for me in the long term, I'm not really too bothered about a lot of the negative press that is in or about Alibaba right now. And if you kind of feel the same, then this is probably a really good opportunity to go buy Alibaba. If you think, oh no, Alibaba's revenue and profit are going to fall off a cliff, they're going to get delisted from China and the numbers are fake, then you're probably not going to buy that one. And it's probably as simple as that. For me personally, this whole Alibaba hate and this whole China stock hate kind of just reminds me back to 2018. Now, some of you guys might not actually be invested into the stock market in 2018, but basically 2018 was a rough year for the stock market. The stock market pretty much didn't do nothing. The stock market in general, a lot of stocks were flat for a good period of time. It was a pretty bear market. A lot of tension were at the time between North Korea. There was also a China trade war going on, and yeah, stocks kind of stayed flat for most of 2018. And also also, a quick point on that is like the amount of people I see nowadays that are struggling with stocks that go down for like 6 months or don't do anything for 6 months blows my mind, because it really does scare me that some people struggle with the concept of stocks going down or not doing anything for 6 months when they realistically are going to have a shock. Maybe they've just got used to stocks going up through 2020, but it's not always like that. There's times where stocks generally don't do anything. You could invest into a stock and it does nothing for 2 years. You could invest into a stock and it just goes down for 12 months. It generally scares me that some people are kind of in that for that quick get rich quick scheme, and they're going to be in a shock for when we actually have when they have stocks that don't do anything for 2 years, or we have a stock market that just stays flat for 2 years. They're going to be in absolute shock, and it is scary, like the amount of people that do struggle with that side of investing into the stock market. But going back to my point, it just kind of reminds me of 2018, where so many Chinese stocks were just beaten down and didn't do anything, and they fell off a cliff on share price. And a lot of it goes back to this North Korea and China trade war and heating up, and this was an actual thing that were going to kind of affect a few companies because there were going to be a lot of tariffs on there. And then it was the point of view, are China going to stop the US from trading in China? Are US going to then retaliate by delisting a lot of their stocks off the US listing? And so many Chinese stocks got hurt, and two in particular that got hurt that I invested in one was JD.com and one was Alibaba. You can see this is the dip here, so it was 205, by the end of the year it finished around 35% down, and this is when I actually started buying Alibaba. I actually started buying Alibaba a bit round here, then I started to buy a lot more heavy when it was down this sort of range. Now for JD.com, I actually went to make 300% on that company, which is really good, and in fact I still hold half my position now. And Alibaba was a company that I invested in as well, and you can see here it went up over 100%. Personally for me, I was up something like 80 or 90% on it. And then when it got to around August time, I actually sold half of my position off and I made a nice little profit. And since then, I still own half my shares, but I made a good amount of profit on the company. So for me, previously, when I've seen a lot of fear from a lot of these Chinese stocks, it's never bothered me personally. I take them as good buying opportunities. And previously, when I've done that, I've made some good money in the stock market on these Chinese stocks. And investing right now in this opportunity, I think I'm going to make some good money from this stock once again. And also a little point on this monopoly and regulation and on a lot of these Chinese stocks. Put a lot of fear out there with Chinese stocks, but the thing that always makes me laugh is, let's not pretend like the US has been trying to crack down on its own giants of the stock market. You know, you look at Google's had so many monopoly cases against it before. Apple's had so many monopoly cases on it again because of the App Store. Facebook has a lot of monopolies on it as well. So you can say like Chinese stocks always kind of get, as soon as the kind of some little regulations come out of Chinese stocks that they're going to regulate them. The thing with Chinese government is that they say something and they follow through with it. Where on the US front, it's happening exactly the same on a lot of these US tech giants. The thing is though, is that they just never follow through from them. But the same thing applies, and it just makes me laugh that one thing is always pushed out to be like really negative on one company, and the other one kind of like, oh yeah, we might look into it and we might stop them somehow, but yeah, we'll talk about it for 10 years before we actually do something. And it just kind of makes me laugh that something, the exact same thing happens, but just because it's in a different country, it's always seen as being really negative on the company, that it loses half its valuation over a course of a year, which I always think is, for me, the buying opportunity for me to come into it. So Alibaba at the moment, like I said, has fallen off a cliff. It's nearly lost half its value over a course of a year, $157, massively off its 52-week highs, trading at a P ratio of 19. So if we just have a quick look, and yes, I'm still freeloading Y charts, I will sort this out eventually. If we just go onto the P ratio of Alibaba, you can see here it's currently traded at 19. It did pop up here to around about 40-ish, and you can see here historically it has traded above about a 40p ratio. If I can just actually flick down to the average here, you can see there is a 39, I'm just going to call it 40, a 40p ratio on average. So you can see here, historically, Alibaba is below its average P ratio by half, which is already an indication about how cheap this currently is. Flick to the price to sales ratio. Price to sales ratio is currently 3. You can see here normally it does trade around about an 8 price to sales ratio, and even prior to that it has been a bit of a higher price to sales ratio. And you can see here actually the average is 10. So yeah, once again the price to sales ratio is a third below its average. So from a valuation point of view, on a lot of historic metrics, if you just take the average, it does seem very cheap, and it is trading at the lowest it has ever done. Now, just on a growth point of view, you can see here the company is very strong on its revenue growth. You can see here the revenue growth has grown very strong over the previous years. So we are picking up a very healthy growth company. So with a growth company, you are thinking, okay, a growth company normally tends to trade at a premium. So if we go back to Alibaba, it's trading at like a 19p ratio here. Now, the normal stock trades on the stock market for about a 20p ratio. So the stocks that trade at a 20p ratio, your companies that are very stable, very mature. You normally have 3-4% revenue growth. Just flicking back to this is very strong growth. Alibaba historically grows at 30% rate. And this is also back to the point of the monopoly side of it. You know, if Alibaba was to have a lot more regulation and restrictions placed on it, you know, sure, the revenue might slow down, it might not grow at 30% like it does historically, but we're still going to have a very strong company here. And yeah, the fact that it grows at a 30% revenue growth, once again, kind of justifies it shouldn't really trade at a 20p ratio, because a 20p ratio is a company that only grows a slow amount. This is growing probably 10 times faster than the normal company that trades at a 20p ratio. So that's very good. You're getting a lot of growth here for a very good valuation. Profit's a little bit slower to grow. That the reason why is because they invest so much into improving the company, keeping that revenue growth above 30%, and investing into little different companies to help improve their income stream. And we'll talk about that in a little bit when I show you a lot of the companies that Alibaba own. We're just going into the financial side of the company. You can see here assets to liabilities is very strong. You can see the debt to equity is just getting stronger and stronger. Debt to equity ratio around 13%, which is good. You can see here cash 150 billion. This is not in US dollars, by the way. And then you can see 483 billion, so 3 times the cash to debt, which is very healthy. So you can see here all the little income streams that Alibaba does have, like Alipay, but you can see like Google Maps, the equivalent of Groupon, Dropbox, WhatsApp, Tabayo, which is a lot like eBay, and Tmall, which is a lot more like Amazon. People quite often say Alibaba is the equivalent of Amazon, but actually the platform isn't. It's actually designed more for like wholesalers and third-party sellers, and obviously they have AliExpress as well, but the actual platform that's actually a lot like Amazon is actually Tmall that they actually own, and a lot of people use that. You actually won't believe how popular that actually is in China. And yeah, there's even a lot of investments that they have that aren't even on here. Like I think they own like a stake in one of the popular streaming sites that's like YouTube, which is like Bilibili. Also Alibaba Pictures that you might see, they're quite often now, if you go see a film, you might see them come up on the intro credits to the film. So yeah, there's even a lot of investments that aren't on here that they own, but just from this list you can see that this is where the profit growth the profit goes to investing in these income streams that helps that revenue growth. And this is why they've been able to grow so much. Quite often people say, how do they keep up that growth? They must be fudging the numbers, but the reason why they do so much good growth is because they just keep investing into the company. And you can see here, there's a lot of investments that they have done into the company. Now if you go into the recent earnings, you can see here EPS was very strong. Revenue was a slight miss by 2 billion, but still grew at 33%. It wasn't a huge miss really, so the numbers were still pretty good. I mean, it was just a slight little miss. I mean, they should have fudged the numbers a little bit more, then they would have been okay, wouldn't they? But yeah, the big thing that was the big standout, I think, in the actual earnings report was this here. They actually increased their share repurchase program from 10 billion to US 15 billion. The largest share purchase program in the company's history. So this is really good. I really do like companies buying back shares. I actually prefer them buying back shares than dividends as well. So the buying back shares will be very good for the company. It will make it look better on the EPS side of it as well. And yeah, a good thing to see is like if management ever think that their company is undervalued, the best thing to do is just keep buying back shares, because if you keep buying back shares, they're getting them at a cheaper rate as well. And yeah, it'll also make the company look better financially than what it actually is as well. So yeah, buying back shares right now is a great thing, especially at these sort of prices. And yeah, I can just say that is a really good decision by management right now, especially when it's at these sort of prices at $157 that I didn't even realize it was at until Sunday night. So overall, what are my thoughts on Alibaba? Is it a buy? Is it a sell? Or potentially buy more? For me, obviously I own the company, and so that might make me a little bit biased to it, I guess. But for me, definitely sell at the moment. If you were to sell the company, it would be crazy, because you'd be selling it at the lowest valuation it's ever been at, which would be nuts. To buy the company, for me personally, like I said, I don't see too much risk with this company. So for me, I'm liking to buy this company at this sort of valuation. And if you think the numbers are legit and you think a lot of the media is an overreaction right now, this is probably a screaming buy at the lowest valuation it's ever been. So for me personally, buying Alibaba at these sort of prices does make a lot of sense. I will be buying Alibaba at these sort of prices. And yeah, I generally didn't think it would get to $157, but that's just a bit of a reality check of, the stock market can change very quickly. And it kind of goes back to my favorite saying, which is pretty much the saying that I built my whole investments over, which was from Warren Buffett, which is be fearful when others are greedy and be greedy when others are fearful. And I've always lived by that from investing into the stock market every single day. When I look at the end of the day at the stock market and everything's going up, green, my mind instantly goes, okay, is this time to start thinking about selling some stocks? And when the stock market goes down, I think, okay, the stock market is going down, it's going down even more. This is the time when I start being greedy, buy more and more. And that's what I built. And that's basically how I've achieved so many good gains on stocks. How I did that previously in Alibaba is that when I see the dips, I buy them. And yeah, that's what I followed. And at the moment, I see this as a good opportunity. So I'm going to attempt to buy this dip and hopefully make some good money on Alibaba over the next kind of 2 to 5 years. So that's the video on Alibaba. Hope it was useful. If you could hit the like button, that'd be absolutely amazing. If you're new, subscribe, and I'll see you next video.